All right, great. Hello, everyone. Joe Rapisarda here, coming to you live with an update on the markets and where we stand right now. I've been wondering whether or not I should post a live post, but considering we are actually just starting the market open and the Dow is down 1,300 points in the pre-market, I thought it might be worthwhile for me to get on Facebook Live and just explain kind of what's going on from a larger picture from the financial markets, what is going to, what could happen in the future, some outcomes, and then what you can do today to kind of prepare for those outcomes. Again, this isn't anything to worry you. This is not anything, this is clearly not financial advice, of course. I've got a financial background, worked for Fortune 20 company for about 4 to 5 years in various finance roles. So I know the markets, I know what I'm talking about, but I'm not a financial advisor. So this is just me kind of explaining what I'm seeing in the markets, what the potential outcomes going forward are, and some options that you might have to diversify, because we all know that financial advisors aren't telling you the truth sometimes, especially when it comes to hard assets and secure assets. Okay, great. So again, right now, where do we stand? I'm going to pull up the Yahoo Finance chart here and show you guys what the Dow, or what we just opened at in the markets. Let me see if I can do a screen share. Can I do a screen share? No, I can't do a screen share. Okay, that's fine. So I'll just talk to it here. So again, the Dow just opened at 1,589 points down. That's about 6.75% loss right now. Over the last 2 weeks, though, actually since February 13th, the Dow is down about 25%. So I know that a lot of you are probably looking at your 401ks and you're seeing a large reduction in your assets, especially if you had exposure to equities and you weren't really diversified into bonds or any type of safe haven assets. So that's worry number one, right? We know we've had one of the largest drops in history in the stock market. Last week, we had a reduction of 2,000 points in one day. That's never happened before. We've never had a drop that fast. The market's actually closed for one day in general after that 2,000 point reduction. What's going on, Kevin? What's going on, Andrew? Just giving an update here. Again, if anyone has any questions, leave them in the comments. I'll try to get back to you. All I'm doing here is just providing what I'm seeing from the markets, some potential outcomes going forward, and then what people can kind of do now to help safeguard their portfolios. So again, last week, large reduction in the Dow, 2,000 points drop. Market shut down actually for a while because of that. And where are we today? We're 1,500 points down the Dow. Okay. So what's going to happen going forward? Right now, what I believe is going on is we're starting to see a credit crunch. So a lot of people have thought that there was a credit crisis on our hands as it was. I myself, the last 2 years, have been preparing for the credit markets to lock up. Companies have had way too much debt. We've known that they've had the largest amount of debt historically. They've been borrowing at almost no interest rate for 10 years since the last financial crisis. So everyone they're over leveraged. They have too much debt. They're not making anything in profits really. And I think that's what we're seeing now, is that because of the coronavirus as an event that no one planned for, that's now halting business across the world, companies are going to have a hard time paying back that debt. And because of that, you're seeing a large drop in the share price. So I personally would expect to see this to continue. So if you have a 401k or a pension or a personal Roth IRA, buckle up and get ready, because this is just the beginning. 25% reduction in the Dow since February 20th is quite a bit. Typically in recessions, we see the stock market drop up to 40 to 45%. So even if we're entering a recession in general, we're not even at that 40% reduction yet. So you're going to see more turmoil in equity price reductions. Another reason why I think that this is a debt issue is because if you look across the world right now, other countries are doing really, odd things to try to help people with bills. And they know it's because people can't afford bills right now. The wealth gap, we know, is the worst that it's been since the 1920s. This is just a symptom. So if the stocks are doing bad, people are staying home from work and they're not able to get paid, unemployment goes up, the government's trying to provide some relief for them. We've seen this in Italy so far. On March 10th, I'm reading an article from CBS News right now. This is March 10th, 2020 at 4:06 p.m. And the title is Mortgage Payments Suspended Across Italy Amid Coronavirus Outbreak. So right now in Italy, if you have a house, the government has told you, don't worry about your mortgage payment. That monthly mortgage payment, just forget about it. You don't have to pay it. They're also doing that for businesses right now that have debt obligations. So they're telling even the businesses, all that debt that you have to pay back, don't worry about it right now. This is something that we've never seen before in history. So we're going to have to watch what happens over the coming days. But what I feel like happens with that is that the government will incur more debt. They'll have to borrow more money, and there's the risk of inflation because of that. Now, on the home front here in the U.S., we're also seeing similar things to this. Donald Trump has been in the White House over the last 2 days preparing for tax relief. This is an article I'm reading from NBC News. It was written on March 10th, 2020 at 7:15 p.m. and it's titled, Trump Proposes Eliminating Payroll Tax Through the End of the Year. So right now, the White House, yeah, Kevin, no mortgage payments in Italy right now. That's a reality. Right now, the White House, what they're trying to do is they're scrambling to prepare a tax relief package. So essentially what they're going to probably do, according to this article, is totally wipe out the income tax for Americans. So you can work your normal job. Right now we have to pay an income tax. They're going to totally wipe that out. That's a similar type of solution, kind of like the Italy right now in the U.S. Instead of not making people pay mortgages, they're just saying, we're going to wipe your income tax, so you don't have to pay income tax, so you have a little bit more money to pay the bills that they're preparing for people to have. This is also experimental. We've never seen this before. So that's not a start. And before Italy, by the way, Japan, about 3 weeks ago, started handing out what they call helicopter money. So what they started doing was giving every citizen in the country $1,000 a month or something like that. That's another experiment. So that's how we know that there's a larger debt issue that's going on right now. Oh, Danny, I just missed your call. That's quite actually funny that you were calling me during this. But okay, so that's what's going on right now, right? So again, Dow has dropped 25% in the last week or two, largest drop in history. Typically in a recession, we see 40% drop in the stock market. So this is just the beginning. Prepare for that to kind of extend out. But there's a lot of experts out there that think that this is a much larger issue than just a typical recession, including myself. We're entering that once in a century depression type of event. Coronavirus the markets in general were unstable before the coronavirus. I want to make that very clear because, the media is portraying that it's just because of the coronavirus that this is happening. No, that's wrong. Yes, because of the coronavirus, people are forced to stay home. People are going to have more medical bills because they're going to be sick, and you're going to have a higher death toll. But the coronavirus is really just the pin in a bubble that was already existing from 2007. So that's got to be put out there in plain public for people to know as it is. So, again, coronavirus was just the pin in the bubble. For anyone that's jumped on now, watch the last 8 minutes. All I'm really doing is giving an overview of where the markets have been. Kind of just giving some outcomes going forward on what could happen, and then just explaining to some people how they might be able to diversify in their 401ks or pensions or Roths. This is not financial advice. I'm not a financial advisor, even though I do have 5 years in corporate FP&A experience on financial planning and analysis of a Fortune 20 company. I've managed, helped manage assets that had billions of dollars. So this is what I'm doing. I'm just telling you what I've prepared for, and then I'm going to let you take that information and do with whatever you want with it. So what can we do going forward, right? We talked about the reduction in the markets. We talked about, a recession, you typically see a 40% drop. So we're still about halfway through it. We know that the Trump administration is trying to do tax relief to really just have helicopter money to Americans so they have more money to pay bills. Italy right now, you don't have to pay your mortgage. That's another one. Well, right now you'll notice if you guys check into gold, gold is doing quite well, and I expect gold and silver going forward to continue to do well. Reason being is that they're hard assets. These are investments and really money that have been ignored by the financial markets and financial advisors for quite a long time. But they've existed for thousands of years. Countries have always held them. Central banks around the world hold gold because it's a form of hard money and a way to hedge against the stock market. And I know a lot of people that are fund managers right now that are looking to diversify into gold more. So one thing that you might be able to do going forward is consider allocating into gold. You can do that in a few ways. You can purchase physical metals from companies like APMEX, APMEX.com. You can go to goldmoney.com. If you have a Roth IRA or a 401k, you have the ability to buy into indexes that specifically follow the price of gold. That's something that I would consider looking into. I've talked about Bitcoin in the past, and I'm very passionate on crypto. I think that out of this whole chaos, we will have a transition into a new digital currency of some sorts. Bitcoin will exist as a form of digital gold. We know that countries right now are trying to create their own virtual currencies, including the US, including China. I do recommend to people as well, I do myself, have at least a small percentage in Bitcoin. Now, Bitcoin did drop. We had a pretty significant drop in price over the last 24 hours, about 50% almost. So we went from 10.4 down to 6,000 this morning. Those of you that are investing in crypto for a while, you notice that's normal price swings. And what's going on right now is everything is selling off. Typically, when the market sell-off happens, people are flocking to liquidity. They need to pay back bills. They're worried. They're going to cash. They're selling stock. We're seeing that with Bitcoin as well. Even gold today took a small dump. But look into the metals. Small percentage in Bitcoin. Even if the price is dropping now, download Cash App, buy a couple bucks at a time passively. If you have a 401k or a Roth and you can get yourself into some bonds, try to diversify into some bonds. The problem with bonds that we're having right now, though, is that they're approaching negative interest rate territory. The U.S. 10-year Treasury bond has dropped significantly in the yield. It's about 0.3%. So what that means is that people are buying so many Treasury bonds because they're a safe play when the market is crashing, and the return on that bond will decrease as more people buy it. So we're close to 0% interest rate right now on that. Around the world right now, every other country pretty much has negative yielding bonds. I've been very passionate on negative yielding bonds and debt for a year now, ever since we've really seen them come out, because you don't make money on that. If you buy a bond with a negative interest rate, what that means is that you pay $100 today and you get 90 back in the future. This is something that we've not seen in 5,000 years of recorded financial history, so we still don't know how that's going to play out. But what would you rather have, though? Would you rather lose 20% of your portfolio in stocks, or would you rather have a bond that isn't paying you anything in the future and you still have that money, and maybe it's negative and you pay a little less? So, consider looking into bonds if you're able to actually diversify into that manner. But that's really about it. I mean, buckle up. This is really we're just getting it going here. It's been a hard push to now, but again, I expect going forward, we're going to see that tax relief on the U.S. side. We're going to have our income taxes cut. We could see something just like in Italy, where I don't think on the U.S. they'll do this because there's too many people here, but some type of relief given to people so that they can afford the bills and stuff. People should be preparing to work from home, like we already know this. But remember that as people work from home and as schools get shut down, companies aren't going to be as profitable as they were. So there is the risk of job loss here. So if you can, hold cash, get yourself some gold or silver, diversify into Bitcoin if you can a little bit. Don't look at the price fluctuations, buy a little bit at a time, very small. And then bonds, and that's where the play is right now. And then wait it out until until the stock market kind of calms down here. But that's pretty much it. One thing I want to say at the end of this is I did create a new Facebook page. I have a Facebook, I have a Twitter, and I have an email subscription. The account is called Adoption, ADOBTION. You guys can just go to my Facebook page and you'll find the links there. If you follow that page, what I'm doing there is I'm trying to educate people on how to purchase, buy, and use Bitcoin right now. Why should you care about this? Well, if we're going to enter into this, depressionary, recessionary world, you're going to need a way to actually preserve wealth. And history shows that in the past, that's been done through gold, hard assets, bonds. But going forward, I think there's an argument for Bitcoin. So I give cool little tips and tricks on that page. I also give a lot of the macroeconomic views like I do here. So give me a follow on there. That's about it for today. Depending on where things go in the future, I might jump on again. If you've got any questions, though, that you want answered, please leave them in the comment sections. All right, everyone. Until then, take care, love, live, and enjoy. Bye.